That is the decision readiness check.
Yeah.
You end up coming to Jason and I, and let's just talk about one decision in your life where if you needed capital for X, we'll just pressure test it against your other accounts. We'll look at, does it come from your 401k? Does it come from your high yield savings? Does it come from your W-2? Does it come from, you name the account? We'll just pressure test it against properly engineered whole life. We'll look at the differences. And guess what? If you are structured correctly and you have access and it's guaranteed, it's contractual, it's not costing you anything in taxes, we will also be the first ones to tell you. And we'll say, hey, congratulations, like you're actually set up correctly. I think having that clarity and someone validating your system is actually going to help you have peace of mind. Welcome to another episode of WealthWise Banking. I'm here today with my co-host, Jason Sipple. And man, we just came off of a long holiday weekend. How was your weekend, man?
It was incredible. We had a holiday though. I kind of missed that.
Yeah.
I mean, life of an entrepreneur, right? I think I did have some R&R time. I hope you did as well. It was a pretty lazy Monday, but still a lot of focus on what we do. So
Yeah, no, same. Except for the lazy part. It was work. Just, staying up to date with a lot of the folks dialing in, trying to set appointments with us, moving their plans along. Even on the weekends, we're just grinding away. So it's good. It's a good problem to have. Blessed are we to have these problems.
yes, that's the free frame, man. I was thinking that in my head. So thanks for doing that for the listeners. And what are we getting into today?
Yeah, so this is an episode that we've kind of talked around before, and really what it's about is if you needed large sums of money in the next 7 days, let it be 10,000, 25,000, 100 grand, 250 grand. The number really doesn't matter. If you needed money the next 7 days, would you feel steady or would you start doing math? And it's not because you don't have the money, but really the question is, where does it live? How fast does it move? And what breaks when time compresses? So in this episode, we're going to start pressure testing a lot of those assumptions that people have. And I don't want to do it on paper. We're going to do it in real life. And let's proceed, man. So that's what I really want to get into today. It's something I started thinking about over the weekend because as we're moving into this new year, guess what? Bills are coming due. Invoices are getting paid. The phone call I took right before here was, hey, I'm at the property. Bill's going to be coming to you this week. And I was thinking, wow, what great timing for this episode.
That's perfect. I mean, because we talk about all the time, right? The difference between builders and borrowers. We talk about the difference between being proactive or reactive. So this episode, we're really getting into, opportunities that are going to come your way. There's a lot of change right now in the financial world, right? It feels a little rocky, and that's not really what we're here to talk about. But most plans feel calm. The accounts exist, the assets grow, you have your advisors in place, and nothing seems fragile until you receive a call like you just talked about, right?
It's when time starts disappearing, right?
Yeah, it's a time problem. It starts becoming a time and liquidity problem.
Yeah, I don't think it has anything to do with being reckless, right? We do plan intentionally, but what we're trying to do is determine where plans quietly depend on stability. They quietly depend on timing. We actually saw this most during COVID. I think that's probably the one that everyone can relate to when timing just shut everything down. And it's not because that people weren't planning, right? It wasn't that they were reckless. Is that they just didn't have liquid stores of capital that they could access when they needed to. Again, the question is, where do you keep your money? How fast does it move? And what breaks when time compresses?
Can I add another question there for the listeners?
Yeah, go ahead.
This is a question I ask myself all the time. I like to keep it simple, like my last name, but is my money making me money? Because you might hear this, you might go, oh yeah, I got a bunch of money sitting in my safe. That's pretty liquid. I don't need any time to get that. The question is when you spend it for the thing that you need or the opportunity that comes up is, will you ever make money on that money again?
Yeah, the opportunity cost.
Yeah, the opportunity cost. So, if you're, like you said, if you're building something that you can't afford to unwind under pressure, this conversation is going to feel really familiar. If this has happened to you in the past, or maybe you got something coming up, and it's going to point clearly to the next step that's going to remove that guessing for you.
Yeah, and again, it's not more information. You guys have listened to so many episodes at this point. You don't need more information. What you need is more action. So if you want to stress test what your current plan looks like, see what breaks under pressure, that's where you go to wealthwisebanking.com, book a call with one of us, and we'll help you stress test your current plan because I think too many people are focused on growth assets. I need to grow. I need to create, keep and multiply, right? But what about access? What about when time compresses? What about when you're forced to make a decision under pressure? That is the one thing that I've noticed. And I told my story before about why I started teaching this. It was COVID. Too many people were forced to make poor decisions under pressure. They did not have access to capital. When capital dried up, what'd they do? Well, they went to the government, and the government printed a bunch of money, and we ended up going into an inflationary environment that we just haven't come out of yet.
Yeah, that's beautiful. And you remind me instantly again, the first principle of everything we talk about on all of our episodes is think long range. Like that's what you're talking about. You're thinking about down the road, like where am I going to be in 10 years, 20 years, 30 years? And like you said, most people are looking about how can I multiply right now? How can I go out and get an ROI right now? And they're not really thinking about, like I believe you said this already, but the risk isn't running out of money. The risk is running out of time.
Yeah.
And what question forces people to stop assuming and start seeing more clearly?
Are you asking me that question?
I am. I am.
I think it just goes right back to how we kind of opened it up. If you needed a large sum of money in the next couple of days, where does it come from? And here's a follow up. What does it cost you to access it, right? Some folks will end up keeping, to your point, large sums of money in retirement accounts. Well, if you're not 59 and a half, what is the cost of that access? What is the risk of pulling it out? Maybe you're not getting taxed on the principal amount that you put in, but if you don't put it back into the account within a certain period of time, you lose the opportunity to continue growing that tax free. So I just want to look at, hey, do I have to sell something that I wasn't planning to sell, right? Am I incurring a taxable event? Am I taking on, how about this one, terms that I would have laughed at a month ago? People taking on credit card debt, right? Taking on bank lenders that they weren't expecting to do business with. So, what is the cost of that access if you needed money? And think about it like this. If
How about the
you,
hoops too? You're talking about a lot of hoops, right? What everything you just mentioned has some sort of like bending over, coughing, giving up blood, maybe signing away your firstborn. I mean, just a lot of hoops to jump through. You don't know if you're going to get approved when you really need it.
right, if you needed access to capital because of a medical emergency, and let's say that you're a business owner and that quarter was slow for you, where's that money come from? Like simply put, if your kid got sick, where does the money come from? Think about that. Like, how about another one? Your car breaks down. Like I had the AC in my car break down last year. Where did the money come from when I needed it? Sometimes where we're looking to pull capital, there's an opportunity cost associated with it. It can be in a 401k, it can be in a vault, like Jason said earlier. It can be sitting in a high yield savings account. But what's the opportunity cost of accessing that capital? And that's where we have a specific asset that we like to store, a warehouse wealth, as kind of that rainy day fund, that peace of mind. So that way, when we continue to grow, and I'd say grow aggressively, the reason we can grow aggressively is because we already have a strong, stable foundation.
Yeah, one that when you're taking the loan, right? When you have to access that money, how quick can you access the money? It's typically what, 3 to 5 days from the request that money shows up in your account. Sometimes faster, right? Depending on how large the capital that you need is, and then you are controlling how you're paying your system back, right? I know
Mm-hmm.
I jumped ahead a little bit, but it just get me excited about talking about changing that one thing for everyone. Like how do we again go from being reactive to being proactive? How do we go from having our funds? Like another thing you're kind of mentioning here is having the funds in all of these different, there's one source of money in the world, like there's one source of water. So if you've got all your funds in all these different accounts, when you need it, are you pulling from multiple different accounts, or you just have one that's your foundation for everything we're talking about?
Yeah, that brings up a really good point. Most plans, they're built piece by piece. You have a retirement, you have cash, you have assets. People just build things piece by piece. And in the same way, they have CPAs, they have attorneys, they have advisors. But when pressure shows up, coordination matters, right? That balance matters. And what we want to do is we want to coordinate all of these moving pieces and parts. Speed is required. And when you need access to speed, you need access to capital. That is who wins or loses. Even in the terms of chaos, like let's just not talk about absorption of shock, but capitalizing on opportunity. When chaos shows up, that's an opportunity for someone. It may be shock for someone, for person A, but person B, the builder out there, might look at that as an opportunity. And the speed and access to capital allows them to move swiftly and buy something at a discount.
That's it. And you're talking about simplifying the system, right? Because complexity does not scale. So everything else you just talked about prior to saying, hey, we've got to be ready to move at speed. We need to condense time. We need to make things move faster because opportunities are going to come and go quickly. And he or she who has the gold is going to make the rules. So if you end up with a system that you control, that you're building your liquidity in when something happens, whether it's an air condition emergency, a kid's emergency, an opportunity, all of a sudden you can move at speed. It's no longer chaos. You're not looking at, oh, where is all my money? Because you simplified it and you're keeping a significant portion someplace where it's safe, where it's guaranteed, where it's away from our favorite uncle, Tio Sam, and it's doing multiple things at the same time.
Yeah, I think what we're really talking about is building an operating layer, right? An operating layer that can absorb pressure. Those sort of accounts, like you have your growth accounts, you have the income that supports your day-to-day life, but an operating layer that absorbs pressure and allows you to move quickly for opportunities. That's what we're looking at here. It exists so decisions, they're not forced. You're not making decisions under pressure. You're making clear decisions today. So when pressure shows up, you can act with swiftness. So selling, yeah, it is optional. You could sell things, you could incur a taxable event, but we don't want you to do that unless you choose to do so. So this layer, it really isn't replacing anything that you're building. I look at it as protecting it. You're building an operating layer to protect everything else that you're doing. And that's how where prepared families really start, right? They start with the operating layer, the one that brings and coordinates all the other assets, all the other accounts that they have.
We're building the system on granite, not on sand. We're building it on something that has contractual guarantees, that has absorbed pressure for decades and centuries, right? Like it is time tested. It is simple. And again, simple is fast, right? When you can be simple in your actions, you can make decisions quicker because you're removing all the complexity of penalties, of inability to access thing. And again, this is not replacing everything else. This is just the foundation to being prepared so you don't have to be reactionary.
So what does preparation actually look like here, right? So if we had to look at it, you would identify where pressure would show up first in your system.
Yeah.
Then you would build capital that moves without permission, that you don't have to experience any sort of sacrifice. And then you would decide rules up front before emotion gets involved. That's nothing dramatic, okay? It's nothing complicated. This is just deliberate preparation. That's what we do. And if the reason that I like it, maybe, others who like a structured system may like this, is it comes from my military background. We had to do contingency planning all the time. You don't just roll up into a war zone with no plan. And guess what? Plan A is usually not the plan that you always execute on. You have to have a plan B, a plan C. And building up these stable reserves, these contingency plannings, this is what allows you to absorb that pressure and still keep clarity, even in chaos. That's what we want to do. We want to help you prepare today before chaos shows up in your life. And we're not talking about another COVID event. Like it could literally be something as simple as my kid got sick. Hey, my dog has to go to the vet. These things that create disruption in your life. That's what we want you to absorb and then also capitalize on other conditions, market conditions.
No, it's powerful and I was laughing. I don't know if any of the listeners were chuckling along with me, but I love all the contingency planning, right? Like I find that liberating when we start talking about, okay, let's get clear on plan A, but we need a contingency for plan B, a contingency for plan C. Brother, since you've come in my life, I think in those terms so much more frequently, and it's a lot of fun. So if anybody's listening and thinking, man, this sounds like a lot, or this sounds like a lot of pressure, but that's really what we're looking to alleviate for you is instead of thinking that the common path, this is what keeps showing up in my brain as we're going through this, Jeremy. The common path forward is having many different containers for your money, like all over the place, with, restrictions, with limited access, with, like you said, opportunity cost to them. And all we're saying is it doesn't have to be that complex. You can make it a lot simpler by, again, making the decision to build something that's going to hold under pressure.
Yeah. So, what are the requirements for building under pressure?
Well, the requirements for building under pressure is number one is to be intentional, to simplify, to get on frankly, is to jump on wealthwisebanking.com and jump on a call with Jeremy or I so we can look at your situation so we can help you be proactive rather than reactive. But it's building this specially engineered whole life.
And the reason we like that is that capital remains stable, the access is contractual, and continuity survives the transition. That's what we like about it. So when you define the rules of what the capital actually has to do, you'll find that the whole life aspect of it far superior than a high yield savings account, far superior than the vault sitting in my closet, right? Far superior than the 401k plan because the access and the speed that I have and mitigating the opportunity cost. Like I'm not selling something, I'm not incurring taxable events. I have stable contractual access to my capital that allows me to move swiftly during chaos, to respond either to the chaotic event directly or to take advantage of opportunities in chaos. And when those options, when they're tested, honestly, properly designed, dividend paying whole life insurance from a mutual carrier often meets all of those requirements and more. The cash value, again, tax benefits, right? It grows tax deferred, it's guaranteed. Policy loans, they can be tax free. This is not an investment, folks. Like I think that the people who try to turn it into an investment by going out with IULs, that's not the way to do this. What we want is dividend paying whole life, and we use it as an operating layer. We're structuring it for living benefits. That's why it's called life insurance, for living benefits, not death insurance, life insurance, living benefits.
Yeah, from a mutually owned dividend paying company. You said this, Jeremy, but that's at least been profitable every year well over 100 years. You want someone that has withstood the test of time, that's been around longer than the IRS tax code or the Federal Reserve or the other things that you hear us talking about often. And this is not rocket science. This is simply being uncommon. And most people, there's a little bit of pushback or a little bit, what's a better word? A little bit of worry when it comes to whole life because it has such a bad name.
Well, it's skepticism. And I think it's right to be skeptical about it when it's framed as an investment, when it's
Yes.
framed the way that some of these people that will go out there and try to make it something that it's not. And that's why we tell you that the design actually determines the behavior, the way that you design the asset. Skepticism only started coming about in the 80s when we started trying to turn it into an investment product. And we want to be very clear this bridges the gap between saving and investing, but it's not investments. I think that anyone who goes out and tries to talk about rates of return on premium and comparing it to the stock market, that's not the guy that you want to work with. You want to work with someone who's intentional, who designs it for these liquidity shocks, who maximizes the opportunities that are there. I think that that design, that's what matters. That's what separates who you're working with between being a professional and honestly just selling you snake oil.
Yeah, let's take that a step further. And frankly, I'm not looking to work with the people who are coming and asking me for 4, 5, 6, 7 different illustrations, because that all that means is that there hasn't been enough clarity about what we're trying to achieve, not only today, building that opportunity fund, but what do they want 10 years from now? I have an email in my inbox that has like 15 or 17 questions, and 10 of the questions, Jeremy, are focused on commissions. They're focused on the build of it, and what's missing is there's no clarity from the individual on what they really want. They think they want to be their own privatized banking system because people make it sexy, they make it fun. But what this is really doing is this is building you a rock solid foundation, but you need to know what you're doing. You need to have clarity on what you want and what your goal is and where you're going, because that helps us help you.
Yeah, that is the decision readiness check, right? If
Yeah.
you end up coming to Jason and I, and let's just talk about one decision in your life where if you needed capital for X, We'll just pressure test it against your other accounts. We'll look at, does it come from your 401k? Does it come from your high yield savings? Does it come from your W-2? Does it come from, you name the account? We'll just pressure test it against properly engineered whole life. We'll look at the differences. And guess what? If you are structured correctly and you have access and it's guaranteed, it's contractual, it's not costing you anything in taxes, we will also be the first ones to tell you. And we'll say, hey, congratulations, like you're actually set up correctly. I think having that clarity and someone validating your system is what is actually going to help you have peace of mind. So if you don't know, that's where you book the call. If you want certainty, we'll tell you. We'll tell you right off the bat. We'll just go through it step by step. But just come to us with one decision. What would it cost if I needed access to capital, 10K, 25, 100 grand, in the next 7 days, not a month from now, not, hey, I'm going to go grab a HELOC. In the next 7 days, where would that capital come from? And I'm going to ask you, does it cause stress in your life or do you have peace of mind? If you don't know, that's why you end up booking the call. We're going to do a decision readiness check and pressure test your current system.
I love the direction we're moving in, my brother. And we say this a lot. You've probably heard this in multiple episodes, but hope isn't a plan. You know, when you're hoping for something to work out, that's just not a plan. That is praying to the man above and saying, hey, will you please make sure that I can take care of X or Y or Z? But you don't really know. And then you start feeling that stress and you're gonna have a lot of stress in your life and continue to have it until you remove that uncertainty.
Another quote that just came to my mind is the military, we prepare for war during times of peace. This is doing the same thing, but for your finances. We're giving you certainty before disruption. That's what this is doing. So before the chaos comes, make sure that you build the contingency plan. That way you are able to react accordingly. I think that's kind of wrapping up the today's episode. Again, if you want that clarity, you want that peace of mind, wealthwisebanking.com. Book the call. We started off the conversation. We work on holidays even. We want to be there for you. And this is very important. Our origin stories are out there. The reason why we started doing this, just quite frankly, it feels good. Like it just feels good to bring that certainty and that peace of mind to people. And that's what really gets me excited about helping people. And the whole reason we started the podcast was really not for me, not for Jason. This was just something we couldn't hold to ourselves any longer. That's what it came down to. So
excellent, my brother. And we already know you are already in banking.
You're just not the banker yet.
We'll see you in the next episode.
Take care.
Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.